This week is the week the Bitcoin cycle top should be in, according to the 4-year Bitcoin halving cycle theory. So historically, Bitcoin has moved in these predictable 4-year halving cycles. And according to the believers, these are driven by the halving reward supply shocks. So what I'm going to do in today's video is I will break down how to actually look for a Bitcoin cycle top, if it's over or not, and if the Bitcoin halving cycle theory, the 4-year halving cycle theory, has any merit or not. Spoiler alert, I believe it doesn't. So as you guys have seen, there are a lot of charts this week everywhere on the internet saying the Bitcoin top is in according to this chart. So this 37.24% is actually the days after the halving to the next halving. So usually from the halving, 37% to the next halving, then people say the top should be in. And according to this, we've seen this actually the last few cycles happening as well. So this time it's actually right at the end. So according to the believers in the theory, the top should be in. So 37.24% is 543 days, is also 77 weeks or 17.8 months. So that's the time the cycle should be done. I'm sure every one of you saw this as well. So from the all-time low to the all-time high is normally 1,064 days. And from the all-time high to all-time low is it 364 days. And this guy right here, he mapped it out. And as you can see here on this, so this pattern would print this cycle all-time highs the 6th of October, which was last week. So this guy mapped it out. So as you can see, it worked perfectly these past cycles. So it went, like he said, from the all-time low to the all-time high, lasted 1,064 days. So this seems to be working. Then we had also another chart. This uses the average. So like I said, 1,064 days from the bottom. So usually Bitcoin should be moving upwards right at this time actually, but it's not doing it. So what does this mean? Does this mean that the cycle is over at the moment? Or does this mean we have a longer cycle than usual? What does this actually mean? So, and there were a lot of charts. So this one was another one. He actually uses a little bit more measurements. So he does it from top to bottom, bottom to bottom, halving to top, top to top, bottom to bottom. And as you can see, in every cycle, it's kind of the same. It's not exactly the same, but it's usually the same. So here from halving to top should be the top at the moment. From top to top should be the top at the moment. But then the thing from bottom to top is usually 1,048 days on average. So as you can see here, we are at the moment already at that point. According to the previous cycles, it might go a little bit longer. And this then, so if we do according to the last 2 cycles, this will eventually top in October 24th. So according to this last metric, we are lucky that we are still 2 weeks in. So it will top in October the 24th, according to this. But does this have any merit? Let me explain in a second. So the next one, and I think the next one is the best one in my opinion. So if you believe in the Bitcoin 4-year halving cycle theory, I think this one is the best one. So this one is from Leo Matt Hurt. I found this on Twitter. Well, actually, a friend of mine in Discord, Chris, sent it over to me. And in my opinion, if you think this metric has any merit, then this is the way how to do it. Because the Bitcoin halving cycles, it's not based on, it's not time-based. So, okay, it's 4 years after it, but it's not exactly always in time. Bitcoin block lasts 10 minutes. So, and it's not always 10 minutes. So sometimes it goes a little bit quicker, sometimes slower, but it adjusts. So it's on average 10 minutes. But as you guys all know, the halving is not always exactly 4 years later. The halving lasts actually 210,000 blocks. So what this does is this adds 210 blocks two last cycles peak and then. So according to this, you get this cycle top this year in October 15th. So if you believe in the 4-year halving cycle theory, I think this one is the best chart in my opinion, which is actually based on the Bitcoin blocks, not on an arbitrary timescale. And here we get the top on October the 15th. So let me explain what the problem is. And the problem with the 4-year halving cycle theory is that investors apply this rule without even understanding why it worked in the past. And that's the most important thing. In investing, of course, everybody tells you need to look at history to predict the future. Okay, but why do we look at history? To see why it did what it did in history, not to just ape it and do exactly the same as it did. So why did this work in the history? And because the problem is a lot of people are going to look at this cycle, and if the cycle is a bit longer, they won't even understand why this will fail this time. And so the idea that why everyone thinks this worked in the past was that cutting the miner supply by 50% every 4 years would cause a supply shock. And then if demand stayed the same or even went higher, then this supply shock would make Bitcoin go parabolic 12 to 18 months later. So this was a theory. But the thing is, this has a lot of flaws in my opinion. So I'm not going to say yet why I think or what Bitcoin cycle tops predict, but there are 3 or maybe 4 main flaws with this. And the first one is that at the moment, the halving supply and the impact of it is super small. So the supply that gets released is just meaningless, for example, against ETF flows. The number is so small, it doesn't have an effect at all on the volume of Bitcoin, in my opinion. And a second, so the reason why it might have worked in the past is that the miners, they had a big impact on the price. But at the moment, the miners are no longer key marginal sellers of Bitcoin. So what miners do at the moment, they hedge through futures and have stable fiat financing. So their sell pressure is much, much smoother and not cyclical as it was in the past. And the third one, which you can look at this cycle, why it obviously didn't work, is that when we saw the halving in 2024, it didn't really cause a new bull phase, a new bull market like we're used to. So just based on this bull market, you can easily conclude that the halving cycle theory didn't really work. Let me drink something, sorry. So what does work? And that's, I think, the question why everybody is still watching is, and in my opinion, and I think, and I will explain it and I will back it up with a lot of data, is liquidity. Liquidity cycles dominate now, and especially in Bitcoin, since it's a global asset, it's global liquidity. And that's the thing. So since Bitcoin is a monetary hedge and was actually made to be a monetary hedge, global liquidity, which is, you can even call it a tracker of monetary inflation, that's currently the single most important factor which is driving the Bitcoin price and is also marking these Bitcoin tops and is creating these Bitcoin cycles and these bull markets. That's just because of the rapid expansion in global liquidity. And it's not due to the block reward halving, as many might maybe think. It's these macro global liquidity cycles. And you can see it here on the screen. They just happened to align with the 4-year halving reward cycle. So I'll first explain global liquidity a little bit and where it's headed. And then later on, so don't leave yet, I'll go over cycle by cycle, so you understand it a little bit better, what happened in each cycle, why we saw these bull market uptrends in Bitcoin. And then, of course, so I got 50 tabs prepared. I will explain every single metric, if the top is in or not. So keep watching. I think this will be a great video. So global liquidity. So as you can see here, this tracks Bitcoin enormously. So Bitcoin and global liquidity, they go hand in hand. When global liquidity goes up, Bitcoin goes up. And so even according to a research report from Lynn Eldon, the directional movements are almost identical. So 83% of the time, I think it was, when global liquidity went up, Bitcoin went up as well. And this is so high that this is just a single most important valuation factor for Bitcoin if you're an investor. And of course, there is the 13-week lag, which I show a little bit later. So everyone, of course, wants to know, if I say this is the most important thing, when is the top? So when will the top be of global liquidity? So I always follow Michael Howell from Cross Border Capital, which is like the godfather of global liquidity. And he's thinking that the global liquidity top will be in January 2026. So like I said, for Bitcoin, there is a 13-week lag. So usually then when you see January 2026, 13 weeks later, we will have the Bitcoin top. But of course, everybody knows this. And if everybody knows this is the metric to look at, the lead lag, well, the lag will become smaller and smaller. So I think when global liquidity will top out, Bitcoin will top out immediately afterwards. So don't try to play with the lag on the top. I think during the cycle, you can use the lag, but when there is the actual top, I think you need to be much, much quicker. So how is global liquidity doing at the moment? You can see it here. So global liquidity is actually this week at a record high of $185.1 trillion US. I'll zoom in a little bit so you guys can see it better, the expansion. So, and this is mostly due to the PBOC liquidity expansion, so which is the central bank of China. Of course, the falling bond market volatility helped a lot. And because the bond market volatility is super low, we have rising collateral values, which is super important for global liquidity. As you can see, it's not exponential expansion. So the expansion was a little bit tempered by the pause in the US dollar, which is also super important. I will explain this afterwards. If the dollar is going up, this is a big red flag. So when you see the dollar going up, maybe this is also a cycle top, in my opinion. And then, of course, as we all know from the latest FOMC statement, the Fed is still tightening its liquidity. So the Fed is still doing QT, which is obviously not good for global liquidity. And now this is the thing what I said, what I was going to do. I prepared this as well. So this is also a bit zoomed in how high Bitcoin can go based on the current global liquidity. And it's not much higher anymore. So be careful. It's not bearish, but it's not ultra bullish either. So now what I said was, I will go over cycle by cycle why from the beginning, the 4-year halving cycle didn't work, and why we saw these big bullish phases in Bitcoin. So the white line, that's a gauge of the price and supply of dollar credit. So here you can see the white line. So this is a combination of banking reserves held at the Fed and the US banking system. So the thing is, this is most likely this is Fed liquidity. And then the green line, this represents the effective Fed funds rate, which is set by the FOMC. And so you can see here, this is Bitcoin, of course. So this starts in 2008. And of course, what happened in 2008, that was the global financial crisis. This is why Bitcoin was created. So the global financial crisis destroyed the financial institutions globally. And what happened was QE started. So they created quantitative easing. And because of that, we saw this glorious rise happening in Bitcoin already from the start in 2009, actually. What happened as well from 2008 to 2013, so the first bull market actually, was that the Chinese ramped up credit spending. And this is my next slide. So there was a massive increase in credit growth. and it flooded the world with Yuan. And of course, as Michael Howell always said, liquidity, global liquidity, always will move over around the world. It's not because there is an expansion in the Yuan that not all the assets around the world will move up. Global liquidity is global, and when liquidity is somewhere, it will end up everywhere. So there was a massive expansion in Yuan, and this ended up mostly in gold, but also it spilled over to Bitcoin. And this is what happened the first bull run. And then, of course, we saw the top in 2013, and it was because the Fed and the PBOC, they stopped expanding their money supply, which then ultimately ended the 2013 Bitcoin bull run. So, next bull market, the one from 2013 to 2017, Bitcoin rose again, and it rose from the ashes. I was not here, but for those that were here, they told me everyone thought Bitcoin was dead. It was a failed experiment. So it rose back from the ashes because of an explosion in Yuan supply. So again, not dollars, it was Yuan supply. And that's what I mean by global liquidity is important. Not only Fed liquidity or Fed M2, it's global liquidity that's important, because if it's Yuan, it will eventually find its way to Bitcoin, and that's why we saw the massive bull run happening in 2017. This was because of the Yuan expansion. Next up, the latest bull market that I think everyone will remember, and most of the viewers will remember, was of course the COVID bull run. So the bull run that was from 2018 to 2021. And I don't have to explain this bull run, I think. So there were trillions of dollars printed, and they just found their way to crypto. Everyone was gambling. The supply of dollars doubled. The price of money quickly fell to zero. So this is the price of money. The interest rates basically. And then same as always, when was the top? Well, the top was when the Fed began shrinking its balance sheet again. And also, they quickly raised interest rates, and this just marked the top of the bull market again. So, to me, it's actually super crazy that there are actually people thinking that we saw this bull market because of the Bitcoin halving reward, because of the halving reward went down by 50%. It's so crazy that there are actually people believing that's the reason why we saw this exponential move in Bitcoin. That's just not true. That's so not true that it's... But here you can see it. So I went over it cycle by cycle, why we saw these expansions in Bitcoin. And that's just the reason. So now the thing is, what now? So because at the moment we didn't see that much. So interest rates were still high. We didn't see that much Fed liquidity. So what happened this cycle? Because Bitcoin went up, and this is explainable by this magenta line. So this time around, the engine of credit growth that came from the Fed reverse repo program, and the reverse repo, it fell to its current zero value. So they emptied it out completely. And this, you can see it here. I don't know if it's visible, but this unleashed 2.5 trillion of liquidity into the markets. And as you can see, this is, as always, liquidity into the markets finds its way to Bitcoin. And you see Bitcoin follows the emptying of Bitcoin almost one-on-one. So this was the reason that we saw this latest bull run. Well, it's not a super bull run. Everyone is not happy, but it is what it is. So what now? And the thing is, see, he wants to end deflation. So you can be pretty sure there will be, and like I said a couple of minutes ago in global liquidity, so Chinese liquidity is going up. I'm also pretty sure that Trump, he wants to inject a lot of capital into the markets. He wants to have a booming stock market. He needs to refinance the debt. So they didn't start doing it because they pushed it a little bit later. Why I think the cycle will move a little bit later as well. I'll explain it a little bit later when we talk about interest rates, but that's just it. So let me finish here about the 4-year liquidity cycle, because like I said before, we have Chris in our Discord, and well, I'm sure a lot of people say the same thing. So he's always saying, so this time is different. This time is actually different. And I see this on crypto Twitter a lot. Everybody's talking, is memeing about this. So is this time different? This time is then different. So of course everyone knows the meme. But the thing is, no, this time is just exactly the same as every single cycle. It's not different. It's just the same, because Bitcoin never followed the 4-year halving cycle theory. It's just liquidity that drives Bitcoin. It's liquidity that's always driven Bitcoin. Every single Bitcoin expansion, every single Bitcoin cycle was driven by liquidity. Global liquidity, Chinese liquidity, US liquidity. It's not the Bitcoin halving cycle. So this time is not different. This time is actually the same, because it's also, again, driven by liquidity, not the 4-year halving cycle. It's never been the 4-year halving cycle. I'm sorry that I'm rambling, but I want to make this clear. My job, in my opinion, is to educate the most people as possible. And I really want to make this clear, because this is an important thing, in my opinion. To me, the 4-year halving cycle is just a meme created by lazy analysts, because it's just super easy. Look, Bitcoin does the same. It's easy. And that's the thing. Retail, they just ran with it because it's just super easy to understand. And that's why this happened. So I've made for you guys this whole Bitcoin valuation top signal cheat sheet. So for the guys that watched my live stream with George 2 weeks ago, I will probably put the link in the description to watch it, because if you like this, you'll probably like that as well. So I've changed it up with all the top signals. So this is a valuation sheet or a cheat sheet with all the Bitcoin top signals. So the first one that I discussed is global liquidity. And to me, like I said, this is super important. This has the most important factor. At the moment, it's bullish to neutral. So I gave it the score as well. You can see it here. So 30% bullish, 70% neutral. Because the top is not in yet. The top is currently pointed to January 2026. But of course, there are a lot of different metrics, and I will go over all the metrics today with you guys. So thanks if you're still watching. I hope this is helpful to you guys. If it's helpful, please like a comment, share it with your friends and everything. Also, an important thing that I want to make clear is that not every metric has the same importance factor. So, for example, sometimes I gave it a 1 or 3% importance factor that, let's say, if this is super bearish, it's not a top signal yet. For me, if global liquidity would be topping out, that's super important. But of course, as every investor valuation metric, you need to lay everything next to each other and then base your view according to that. Next up, like I said, are the interest rates, and 80% of world central banks are at the moment easing their interest rates, and the Fed is also cutting into inflation, what's also super important. And what I wrote here, the comment is, interest rate cut by the Fed means more money becomes cheaper, equals to people go further down the risk curve. And this is not negligible, because in my opinion, gold is still a more safer asset than Bitcoin. So there is at the moment liquidity into the system. You can clearly see it because of the gold price going to all-time high. But I think if we go in a more risk-on environment, but still that you need a monetary inflation hedge, I then think Bitcoin will take a part of gold. So, but like I said, here you can see it, 85% of the central banks are still in easing mode, and this is a very good signal. We know it's not a top. A top, we can look at the tops together. When was last top? It was in November, I think, or December 2021, let's say November. That was when the Fed and all the other central banks were raising their rates again. When so now the central banks that are cutting rates is going up, then it was going down. I think it's the same in the cycle of 2017. It was going down again. So this is when you get a top, when everyone is going back to raising rates mode. And of course, for the US, it's super important. So the US also just started their cutting cycle. And why do I say this is important? Because the US got this massive debt that I said earlier. They need to refinance it. And by refinancing it, they will pump a lot of liquidity into the markets, which will pump asset prices, because there will be monetary inflation, because the dollar will be worth less, and because people will flee to monetary inflation hedges like Bitcoin and like we already see happening with gold. Why is this not happening yet? Well, like I said, because they pushed the deadline to further into 2026. And I think they are waiting on lower rates. That I think I explained this in a video a couple of months ago, to refinance the debt at a lower rate, which is super important, but it will still come. And then next up is the DXY strength. So like I said, the DXY, and I just see it right now, is the second most important thing, because if a DXY reversal would happen, this would ring alarm bells. So if the dollar would go up enormously, that usually marks a top for Bitcoin as well. At the moment, the dollar still looks weakish, but it's recovering, which is not good. The only reason why I say it looks still weakish, just compare it to gold. So you see the gold price is going down versus gold. So here you can see the inverse correlation. This is research from Lab for Crypto. You can just also see it like this. So every time, and this is, I'm speaking too much, I need to drink. So every time the dollar is starting to reverse, starting to go back up, these align with tops in Bitcoin. We see it every time. So this was 2013. We see it the same here in 2017. So when the dollar was going up, this marks the top. The same here. So we see this every time. And at the moment, if you look at this channel, it's starting to bottom out. So actually this month, you see the dollar going back up. And this is why Bitcoin is having difficulties break its all-time high. How I think it's going to go is that it will still go down. I'm a really big believer in, like I said, Trump wants a lower dollar, and I think the price action follows extremely well what it did when Trump became president in 2016. So this, I showed this on stream a couple of times. It's actually working remarkably well. So how I think it's going to play out, and it will play out exactly the same as 2017-18 cycle, is that it will, and it's worked perfectly on the channel, maybe it will go up a little bit, but then later into the year, and this is why I think the cycle will go a bit longer, is that the dollar will then again lose its strength, one, because of the debt that will need to be refinanced, so the dollar will be weaker, the interest rates that will go lower time after time. So I'm still hopeful that, but at the moment, I have to admit it doesn't look good, but I think it's not bad either. Also, I think you need to understand this. There is also a lag. Let's say the DXY reverses here. It's not the end immediately. The DXY is helpful for global liquidity. So, and also already in global liquidity, we see the 13-week lag. I think the dollar has a little bit lag on global liquidity, which has a lag on Bitcoin. So I think there is a lag of around a couple of weeks where you can act on. So it's not that, let's say this is now the bottom of the DXY, that the top is now in immediately this week or next week. No, it doesn't work like that. Then the next thing of my macro criteria, after this I will go much more in depth on Bitcoin itself and technical analysis and everything. So is the ISM, and the ISM is actually something I found from Raoul Pal and Real Vision. So they think, and this is based on their, how can I say, what do they call it? Everything code, that the Bitcoin top will go further to even this summer. Why? Because they base it on the ISM. And maybe it works because if you look past 3 cycles, Bitcoin perfectly followed what the ISM was doing. So according to this, and this shows it a little bit better, the top could be in later in the year. So maybe the summer. So Bitcoin will then top later in the year. It's possible. I follow more global liquidity. Like I said, I give it 100%. The top should be in January, but that won't mean that I will sell immediately then. When it will be December or January, I will reevaluate, look at all the other metrics, what it's doing, because maybe it will go higher. Maybe the Fed will go enormously into quantitative easing. Maybe they will lower the interest rates enormously. Maybe because the midterms are coming, maybe Trump will flood the markets with liquidity. You never know. So I will reevaluate by then. What else do I want to show about this? Yeah, that's it. Next thing is gold. And gold I'm going to give a little bit more because it's kind of important in my opinion. So gold is making all-time high after all-time high. And as we know, Bitcoin and gold, there is a lag. So also, I made a video about this a couple of months ago. So if you haven't yet watched my video about this, where I go in depth and explain this signal, but very short and brief, Bitcoin lags gold by about 90 to 100 days. So if gold makes this enormous move, Bitcoin should follow it with a 90 to 180 day lead, which makes me super bullish Bitcoin because so knowing this, it's impossible that Bitcoin will top here, knowing gold is making all-time high after all-time high after all-time high. That's why I gave it super bullish, 100% bullish, because gold is making all-time high after all-time high. We know the lag is there. We know the lag works. The only thing, and I can show it with this, is gold and Bitcoin are often negatively correlated in the short term because they take liquidity from each other. So we know gold and Bitcoin are both monetary inflation hedges, but when there goes liquidity to monetary inflation hedges, they fight for it. So when Bitcoin goes up, gold goes down, and you can see it clearly with this. So over the short term, they are not correlated, but over the long term, they have a very good correlation. So initially, when, for example, gold is going up like it is now, Bitcoin is going down, but then it lags, and a couple of weeks afterwards, Bitcoin goes up. So what you can do as an investor, for example, is when gold goes up, you rotate your gold to Bitcoin, and the other way around. So this is a very good thing you can do as a trader or an investor. Yeah, so then next up, I wrote here as well the stocks and the Nasdaq correlation. What I just briefly want to say this, that you can, obviously everyone knows that Bitcoin and the S&P kind of move hand in hand. Well, not like Bitcoin and gold, but they kind of move together. They move based on the debasement of fiat currency. And what I also want to say about this is that I don't see a world where that the Bitcoin cycle top will be in, which like I said, the 4-year halving cycle theory believers think, but that the S&P and the Nasdaq will still make all-time high after all-time high the whole year. But then Bitcoin would go down. That would be super weird, right? So I don't think that will be the case. So that's just how I see it. The next thing is Bitcoin dominance. So everybody knows the Bitcoin cycle top is in when we see the big blow off top alt season. At the moment, that's not yet the case. So here is the chart, so you can see it here. So every time we see this alt season, this always marks the end of the Bitcoin cycle. We know this, it's over then. At the moment, we didn't see this. We might see this if interest rates come down. I still think we will see this Q4 this year. I'm still betting on that actually as well. But we didn't see it yet. Although, and what I do want to say about this is, so looking at altcoins to see if a Bitcoin top is in, is this. This is the Zcash risk indicator. And usually what happens is, so Zcash is a privacy coin, and pumps in Zcash, like it's written here, is usually a red flag for Bitcoin. So historically, these old Dino coins surges happen near local or cycle tops, as you can see here. So every time there was a big explosion in the Zcash price, usually aligns with the Bitcoin top or cycle top. And as you can see here, I don't know if you see it on my screen, Zcash these last few days went up enormously, which might cause a local top. I don't say cycle top, but local top is possible. What did I give it? Maybe this is too bullish based on the... I first only looked at the Bitcoin dominance, but maybe based on this, I need to adjust it. Like this. All right. Next up, of course, and this changed the whole cycles, are the ETF inflows and the institutional demand. And this is going very bullish. As you can see here, I gave this 80% bullish, I wrote it wrong, and 20% bearish. Why? Well, so let's have a look. And as you can see right here, there is a record inflows of 6 billion driven by employment and shutdown. So this is record inflows into the ETFs. And with BlackRock's share nearly at 1 billion. You can follow this here on far side. So what does this mean is that big money isn't taking profit yet. So who do you think is right? The barber, which believes in the 4-year halving cycle theory, or big funds, quant hedge funds, which are betting on Bitcoin not ending this cycle this week? I'm not sure about you, but I think I will prefer to go with the smart money. This is just enormous. You can see that the chart as well. The ETF inflows are keep on going. This is super bullish in my opinion. So let's go back. Yeah, that's why. And it's kind of important. Next up, we have the on-chain valuations and supply and demand, which I think are a little bit less important than macro at the moment, but not negligible. So these are are things you really have to look at it. CoinClass made it actually super easy, and they've put a lot of on one page. So this is coinglass.com/bull market peak signals. I will also put this, by the way, every link of everything that I'm showing, I'm going to put this in this doc. And for everyone that's still watching actually, so that means you're interested, that means you're motivated in learning, that means you're a serious investor. Everyone that's still here, you get free access into my Discord. So just join Discord, message me in Discord. You don't have to do what I wrote there. Just message me and I will let you in. And I will post this top signals cheat sheet with all the, and I have it right here with all the links and everything in the Discord. So what was I saying? Yeah, so everything was on the CoinGlass website. And as you can see here, not a single metric is flashing for top signal. Not a single one. Not even one or two, no, zero. So thinking that the top will be this week based on zero on-chain indicators would seem crazy to me. So the first indicator we will look at are the exchange inflows and outflows. I give this a 3%. And yeah, that's the thing. So Bitcoin's 6-year low in exchanges and reserves, its implications for institutional adoption. You can see it right here. So Bitcoin is leaving exchanges, and this is always super bullish because, and I wrote it, sorry guys, right here. Where did I write it? Right here. So declining reserves indicate that coins are moving to cold storage. And by coins moving to cold storage means that they are not intended to selling them anytime soon. Next up is open interest. And open interest is not a metric, in my opinion, it's not a long-term metric to look for a top. But it's a short-term metric to look for the top. So if this is flashing, That's a good sell signal. A very good indicator which I wrote here is if the open interest is above 25%, sell. I have it right here, and at the moment it's just at 5%, below 5%. It's green, it's healthy, it's not the time to sell. I can put this on a yearly view, and you'll see the times when it goes higher than 25% is a good time to sell. So as we saw, our last local top was in December actually last year. Bitcoin funding went above 50%, and this was a good selling point. So this is pretty important. It's not a long-term signal to know when the top is going to be. This is more short-term. Okay, the top is now, I need to sell. So I gave it a 10%. So always look at this. Try, by the way, to follow all these metrics. Look at them. Maybe now the top is coming closer and closer. So now let's look at them weekly. But in a normal period, you can just look at this monthly, and you'll be fine. So next up is the stablecoin liquidity. And stablecoin liquidity, I'm going to go over real quick because my last two videos, I talked about this in depth. And this is super important. So stablecoin liquidity is moving up, up, up. So at the moment, the change is plus 6% over 30 days, and it's already at 304 billion at the moment. So the US is promoting stablecoins. Stablecoins are going into the markets. And with more stablecoins into the market, that just means there is more capital from the fiat ecosystem into the crypto ecosystem, which means they will eventually end up buying crypto and Bitcoin. A very good metric to look at is the stablecoin supply ratio, and I got it right here. And the stablecoin supply ratio at the moment is signaling a buy, so it's a good time. So this measures the buying power of stablecoins relative to Bitcoin, which is indicating a buy level. Watch my latest video if you want to know more about this signal. Next up, we got Bitcoin long-term holder supply. And the Bitcoin, you can see it right here. So the Bitcoin long-term holders are increasingly in profit, and they started distributing. So you can see this by this green going down. So this indicates that long-term holders are taking some of the table, which is what you see in a maturing bull. So this is the only indicator actually that signals a little bit bearishness, but not super bearish, because as you see here, it actually works super good. Every time we see the top, you see this having a large dip under the price. We see this not happening at the moment. It's just a small dip. It's not a big dip that we saw during the top. So nothing to be worried about yet, but something that shows that a top might be coming closer. Next up is the Bitcoin short-term holder supply, which is the same as I just showed you guys, but with the short-term holders. So when there are more short-term holders, this is actually indicates local tops. We can see it here, we can see it here, we can see it here. Nothing to be worried here at the moment. It's going up a little bit, but not that you have to be afraid of. In terms of the short-term holders, I like to look at this. So this chart shows where the Bitcoin price sits relative to what short-term holders paid. So this indicator helps to see where we are in the market, and the price rarely trades outside these deviation bands. So at the moment, the price is going up. It's super healthy. This indicator gives a price point, a top of 150K. We're well under that. We're at the midpoint. So I think I gave it a neutral. Yeah, kind of neutral. 5% importance, not bad. So it's just a very good chart to see where we are at the moment. But then the next one is the most important thing in terms of on-chain valuations, in my opinion, is the MVRV-Z score. It's here. So the MVRV score, this measures the standard deviation between market and realized capitalization. And this nowhere near signals that we are at the top. Look at the previous tops. This went sky high, sky high, sky high. That's a blow off top. That's a cycle top, not this. So nothing to be worried about. I think here on this website, they say that under 5 is super healthy. It's on 2.4 at the moment, so nothing to be worried about. Then next up is the net unrealized profit or loss. Let me look for it. It's here. This is actually going a little bit higher. So this this measures the difference between unrealized profits and losses in the market relative to total market cap. So this is at the moment in belief and denial. Let me actually check what CoinGlass gives for this. Here. Yeah, so 70% they say watch out, that's the top. So this is actually also the one that's the furthest. But we're at 55% at the moment, so nothing to be worried about. 3% median. Yeah, I wrote her also right here. Like I said, the halving cycle theory, I gave it a 1%. This is negligible. The top should be in this week or next week, depending on what metric you look at. But like I said, not important in my opinion. Next up is the energy. So Bitcoin is a network based on energy. So it's super important that we also look at that. And a very good metric to use is the Puell Multiple. Let me look. Yeah, so the Puell Multiple, how that works is that's calculated by dividing the daily issuance value of Bitcoins in US dollars by the 365-day moving average, also of daily issuance value. And at the moment, it's at 1. And what does that mean is that 1 basically indicates that miner revenue is at the same as the yearly average. So this is normally, in bull markets, this goes to 5 times, so that the miner revenue is 5 times the yearly average, and this indicates a top. If it's the same as the yearly average, this indicates nowhere near a top. Bitcoin miners are super healthy. Miners are at the moment not a major headwind at all. And in my opinion, this also just shows that the 4-year cycle just doesn't work anymore. Like I said in the beginning, the miners, they don't sell cyclical at the moment. They sell when they have to. It's not only on the 4-year halving periods that they have to sell. No, they just sell monthly or weekly, or I don't know how it works exactly, but it's not like it used to anymore. And they're not the main sellers either. So it really doesn't really work anymore, the 4-year cycle. I'm sorry, I don't know what to tell you guys. If you're still not convinced by now, please explain why or what I missed in the comments, or DM me. I don't care. I think you're wrong, but prove me otherwise. This is a good thing about investing. So always hear your opposite view. Also try to hear why you might be wrong. This helps a lot in investing. Next up is the sentiment, of course, the market sentiment. A lot of retail looks at this. I don't know if institutions watch this as well, but I think in Bitcoin, this is still super important. So the first thing you can look at is the fear and greed index. So like I wrote, there is use this as a contrarian signal. At the moment, it's at 64, which is pretty high in my opinion. That's why I opened the coin market cap as well. And here it's at 54, which is already better. If this goes to extreme greed, of course, it's clear, then you have to sell. Another good sentiment is, of course, a sentiment indicator is the Google Trends. And Google Trends is also super low. It's at the same levels as during the bear market. Nobody is interested in crypto. You cannot have a blow off top or a cycle top when nobody is talking about crypto. And that's also the thing. Are your colleagues on work talking about Bitcoin? Is your mother asking about buying Bitcoin? Last cycle, my grandparents were asking to buy Bitcoin. Is that happening or not? And in my opinion, this is not happening at all. So that's bullish in my opinion. Also a good thing that people, damn sorry guys. What people say is the Coinbase app. So if the Coinbase app is the number 1 in the App Store, this is a sell signal. At the moment, it's the 214th place in the App Store. So nothing to be worried about, I think. Let me see what I gave it. Yeah, I gave it super bullish. Searching bear interest, yeah. and nobody talking about Bitcoin and crypto. So this is not something you see at a top. So also nothing to be worried about, not the top signal yet. Next up, I wrote here the stock to flow model. So stock to flow model is kind of the same as the halving cycle theory. I don't have it prepared because I think it doesn't work. This assumes that scarcity drives price exclusively, which might be the case, but I don't even think the halving reward is big enough to have any scarcity at all at the moment. So next up is some technical indicators, which are not negligible either. So first off, I got the 200-week moving average, which is also the same as the Puell Multiple. So I got it right here. And basically how you need to use this is that past blow of tops, they were 3 to 4 times above the 200-week moving average. This is how you use this. And some people measure this by using the Puell Multiple. You can use this if you want. I just look at the 200-week moving average and that's fine to me as well. But this is called the Puell Multiple if you're interested in that. At the moment, that's looking healthy. I even did the calculation. So the 200-week moving average is at 35K. The price is at 120K at the moment. This is only 2.26% above it, which is much lower than 3 to 4 times above it. So if it goes too high, let's say about 3 times above the 200-week MMA, then you can start offloading some Bitcoin. Next up is the 20-week moving average, and the 20-week moving averages is the same as the Bitcoin bull market support band. I think this is I don't know if I can see it here, created by Benjamin Cohen. I think it's the famous, most famous crypto YouTuber. And how you need to use this is that Bitcoin tops are usually, or Bitcoin price never goes 50% above the bull market support band. And at the moment, it's only 5% above it. So also this, nothing to be worried about. At the moment, yeah, it's already when Bitcoin is going down while I'm filming this. So 5% at the moment. So it's much lower than the 50% that it has been at the tops. Next up is the Pi cycle top indicator. I saw a lot of people use this to convince people it was not the top yet. To me, this is only a 3% importance factor. So it happens when this line crosses this line. So when the 111-day moving average crosses the 350-day moving average, this is something that worked in past cycles. To me, doesn't necessarily mean that it will work these cycles as well, but it's something you can look at, something you can use. Also, another thing which a lot of people use is just the RSI. So you can, for tops, it's best the weekly or the monthly RSI, I think. Yeah, I got it here. Nothing to be worried about, in my opinion. Looks super healthy. If it's above 80, then you can maybe start to think about selling some Bitcoin, but nothing to be worried about in terms of the RSI. Then third, a lot of people also use the power law corridor. In my opinion, not important. 1% I gave it. This is the power law corridor. It points towards 500K. I don't think at all we will see 500K. This is something that worked in the past. I don't think this will work in the future. I've put it here because a lot of people use it and watch it, but yeah, 1% importance factor. This is negligible. Probably next cycle I will not have this in my sheet anymore. Another good thing, a little more short-term-ish, is the Ichimoku Cloud. So, and then you have to sell when there is a bearish TK cross below the cloud. That's a sell signal. I can show where my chart is here. So for example, when the blue line crosses the red line under the cloud, this is seen as bearish. At the moment, super healthy. Above the green weekly cloud, the Tenkan above the Kijun. So nothing to be worried about. We're still in the long-term bullish uptrend. So nothing to be worried about here. So that's it. I've showed you guys all my indicators. So maybe now it's what do I think? So what's my timeline in terms of when do I think the crypto cycle top will be in? When will I be starting selling my Bitcoin? My timeline is Q4 this year. So Q4 2025 into Q1 2026 for a potential peak. So I will sell my positions if there is a macro reversal. So if global liquidity will be going down, if the DXY is really showing strength, if it will go up month over month. The ISM, a little bit less important for me, but this just shows that it can go longer, the cycle. So yeah, the summary is just global liquidity, the peak will be in January 2026, ISM Q2 2026, and then of course, look at this, guys. Everything is just bullish. There's not a single top signal inside, only the 4-year halving cycle theory. But that's it. So nothing to be worried about. Don't let the people scare you. And yeah, that's just it for me. So like I said before, if you don't agree with me, please leave a comment. Please explain, because I'm genuinely curious about your thoughts, and maybe I'm wrong. Obviously, I can be wrong. I'm not. I don't see in the future. But leave a comment and we can discuss it. If you like this kind of content, because I researched this a lot, so I would appreciate it if you can like it, if you can share it with your friends, subscribe to the channel, and then I will make more kinds of videos like this. And I think I will put it probably here on top. So if you liked this one, you will also like my live stream that I did with George One Trader, where we did a full Bitcoin valuation breakdown, and I use this sheet right here. But that's about it for me, guys. I see we are 56 minutes in, so I hope you liked it. It was long, but thank you all for watching, and I see you all into the next video. Bye, guys.